after the U.S., China has the second biggest holdings in U.S. Treasuries. When Washington was wrangling over the deficit, China even joined Russia in criticizing the way that America handled the issue. Niall Ferguson, Bloomberg contributing editor and professor of history and business administration at Harvard, joins us now from Chongqing with more on the point of view from there. Niall, thanks so much for being with us this morning. Some say the Chinese are trying to get some political mileage out of the U.S. debt debacle, publicly criticizing Washington's growing financial problems, inability to solve them on time. What are you hearing from there? What's the tone like?
Well, of course, the official news agency has been heaping ridicule on the United States over the debt ceiling wrangling. And in an editorial just yesterday, they said that this was like trying to deal with an enormous ticking bomb by making the fuse 1 inch longer, which I have to admit I thought was quite a good line. But even in private, you know, when you talk to people both in the world of politics, which means the Communist Party, or in the world of business, there is incredulity at the way this thing was dealt with. And the thing I hear most frequently is, and this is your advertisement for Western democracy? This is the system the West would like to see us embracing? Give us a break.
Yeah, we don't really want that put up on a poster, I'm sure. Niall, do you have the sense, though, that the Chinese government was ever truly worried that U.S. debt holdings would go belly up?
I think there was some serious concern here, though. You mustn't underestimate the sophistication of the Chinese leadership. They have a very good understanding of the U.S. political system. But I think beads of sweat were beginning to appear on the foreheads of people, particularly at SAFE, which manages China's vast international reserves. We're talking here about something in the region of $2 trillion of dollar-denominated reserves. They have, of course, more than $3 trillion in all, but it's the dollar-denominated reserves that they have to worry about. And a very big chunk of those are held in the form of treasuries, various U.S. government securities. So anything that called into question the security of those assets was something that was bound to concern people in Beijing. I may say, though, that there was a general view that a deal would be done. The big worry really is on the currency side. They never thought, and I don't think many serious people thought, that the United States was crazy enough to default on its debt. But they have thought for many years that the risk is on the currency side, and that their holdings of dollars will be devalued because the printing presses will be running at full tilt in Washington. And that's a long-standing concern, and of course a valid one.
A long-standing concern, especially as more and more rumblings of the possibility of QE3 come to the forefront here. Niall, some say that with the U.S. debt crisis, some emerging markets countries look as if they are safe havens instead of the U.S. China certainly tops that list. You're an economic historian. In what way does this current rebalancing of power remind you, perhaps, of something you've seen in the past between the East and the West?
Well, great shifts in geopolitics are often preceded by shifts in economics. And as Britain's imperial power waned in the mid to late 20th century, investors began to look to the United States. But this is different because as the United States encounters more and more economic difficulties and fiscal difficulties and looks to reduce its defense expenditure and perhaps pull back from its overseas commitments, it's a little bit difficult to see what the alternative is, because although China is growing very rapidly and indeed is going to overtake the United States in terms of gross domestic product within, say, 5 years, it's not immediately obvious that an investor would be safer here. There might be some currency upside, and that's almost certain that the Chinese currency will strengthen relative to the dollar over the next 10 years. But there's all sorts of downsides to investing in China, not the least of which is that you're not really entirely secure. This is the rule of law, communist style, and for foreign investors, it's far from clear that it's a safe bet.
Niall, we thank you so much. The View from Chongqing, China. Niall Ferguson joining us there. He is a Bloomberg contributing editor, Tisch Professor of History at Harvard, and visiting professor at the London School of Economics, joining us there via Skype.